Internal Revenue Service IRS Tax News dated September 13th, 2019. Tax Withholding Estimator helps retirees. Figures tax on Social Security benefits. Free step-by-step webinar September 19th. Washington, the new Tax Withholding Estimator. There is a link to the new Tax Withholding Estimator in the description. Launched last month on IRS.gov, includes user-friendly features designed to help retirees quickly and easily figure the right amount of tax to be taken out of their pension payments. This is obviously a bit complicated type of procedure, so it could be a very useful tool for retirees. The mobile-friendly estimator replaces the Withholding Calculator. The estimator has features specially tailored to the unique needs of retirees receiving pension payments and Social Security benefits. So when you consider Social Security benefits, the amount of the benefits that are taxable can depend on different types of factors. Therefore, it can be difficult to estimate how much needs to be withheld on them. Normally, you would need kind of a tax projection to do that, typically tax software. The estimator tool here is basically tax software that will give a more fulfilling or a more in-depth type of projection, and therefore can calculate the withholdings on these more kind of complex type of situations more easily. The new tax offers retirees as well as employees and self-employed individuals a more user-friendly way to check their withholdings. Whether they receive wages or pension payments, it helps taxpayers estimate if the right amount is being withheld from their income, cover their tax liability. The estimator uses a simple 6-step question and answer format using information like marital or filing status, income, withholding, adjustments, deduction, and credits. So if you go through the tax withholding estimator, it'll kind of go through like an interview type of process, asking you questions about the taxes, which should guide you to enter the proper data to then allow the tax withholding estimator to function. Works similar to types of software that is designed for individual tax returns, something like TurboTax or H&R Block type of tax software that you might use to fill out the tax return at the end of the year. Again, it's basically designed to be kind of like a tax estimator, similar to the tax software. If you've never used that tax software, it's probably very similar to the types of questions that your tax preparer would ask you within the interview process or within the tax preparation process. To help people use the tool most efficiently, the IRS is holding a free 2-hour webinar on Thursday, September 19th at 2 p.m. Eastern Time. Among other things, the webinar will feature step-by-step instructions on how to use the new estimator and a live question and answer session. To sign up, visit the webinar page at IRS.gov. There's a link here to that page. Special help for retirees. A retiree can use the estimator to enter any pension income or Social Security benefit they or their spouse receive. The tool then automatically calculates the taxable portion and incorporates it into the overall estimate of their projected tax liabilities withholding for the year. So that's kind of the complication with things like the pensions and the Social Security. A portion of it is going to be taxable. A portion of it's not possibly taxable. And the portion that's taxable and not taxable kind of depends on the rest of the situation involved, although there's a cap on it and so on and so forth. Bit complex, really useful, really nice to have software to help you to basically figure that stuff out so that you can have a proper calculation and estimate of the tax that will be withheld. If a withholding change is needed, the retiree can choose tax due of close to zero or a refund amount. In other words, you can decide with the tax calculator, do you want to say, hey, I want to basically break even. I want you to calculate the withholdings that would make me have no refund and no return at the end of the year. That would be the best situation if you could do that exactly, because that means you get your money earlier. Or typically, you would think you'd get your money earlier. That's typically better because of the time value of money. However, you might, like getting a refund at the end of the year. So you might want a refund at the end of the year, even though it means you're, in essence, overpaying during the year. Or you may well think, well, hey, this is an estimate and I'd rather get a refund than owing penalties and interest for short payments, right? So for that reason, you might want to say, hey, I'd rather have a cushion. I'd rather have a refund, a small refund at the end of the year, calculate this thing so that you take enough money out of my money now so that it will then give me a small refund, and therefore I don't get caught off guard by not inputting something. Even if I miss something or do something wrong, I should be okay given the fact I've over withheld. So you kind of have the estimate to tinker with the tool and see what would be the result. What would be the withholding result if you shot at 0? What would be the withholding result if you shot for a small refund? And you can basically, just like a projection tool, determine what you want to do from that point. The estimator will then link to Form W-4P, withholding certificate for pension or annuity payments. So the W-4, of course, there's a link to it here. That's going to be the form that you would use in order to change the amounts of withholdings on some type of automatic payment, such as a W-2 withholding for an employer, and give the retiree a specific withholding recommendation based on the option chosen. It also gives instructions on how to fill in each line of the form. Enhancements for everyone. The enhancements for retirees are just a few of the many new features offered by the Tax Withholding Estimator. Others include plain language to improve taxpayer understanding, mobile-friendly design, a new progress tracker to help taxpayers know how much more information they need to enter, the ability to go back and forth through steps, correct previous entries, and skip questions that don't apply. This is really nice, by the way, to be able to do, because that, again, it makes it a projection tool. You could say, I'm not really sure what my business income will be, but I think it's going to be around this amount. Well, what if it was on the high end? What if it was on the low end? How much would I have to pay here and there? And how can I, and so how much, you can tinker with it a bit, because obviously taxes, when it's a projection, isn't an exact science, because you don't know until the end of the year. So so the ability to basically go back and forth through the questionnaire process, enter different data, can be useful, a useful tool. Tips and links to help users quickly determine if they qualify for various tax credits and deductions. Automatic calculation of taxes on self-employment income. The IRS urges both pension recipients and wage earners to do a paycheck checkup now and review their withholding for 2019. This is especially important for anyone who faced an unexpected tax bill or penalty when they filed earlier this year. It's also a critical step for those who made withholding adjustments in 2018 or had a major life change, such as marriage, the birth of a child, adoption, or buying a new home. Anytime we have these type of things, obviously that's going to change a lot from the previous year. That can change what's going to be our tax consequences a lot from the previous year, and therefore it's very good to do a tax estimate after that has happened, possibly before that happens, or these kind of big changes happen as well. So, and then you can adjust the taxes accordingly. People most at risk of having too little tax withheld include those who itemized in the past but now take the increased standard deduction. So there's a lot of people that were itemizing in the past. One of the themes of the tax reform was to get more people not itemizing, to simplify the code and take the standard deduction. A few people that were itemizing that are no longer itemizing may have found themselves in a worse position in that case, although overall you would think it would be a better thing. Anyways, back to it. They also include households with 2 wage earners, employees with non-wage sources of income, and those with complex tax situations. Also, anyone who changes their withholding in the middle or later part of this year should do another paycheck checkup in January. So if you're doing your paycheck checkup right now and you're going to say, hey, I need to up my withholdings right now because I need to up them because I know I'm short right now, then you have to do that for the last quarter of the year, obviously. But then you're playing catch up right now, which is fine for now, but you don't want to keep the withholdings at that level in January because you don't need to withhold that much for the entire year. You only need to withhold that much for the catch up portion right now. That means that if you have to do a catch up withholding right now in the final quarter, you need to re-up it in January, reduce the withholding down to what it should be for the entire year, and then you'll get more money in your paycheck and you'll still be okay, typically, hopefully, as you adjust it in January. So that will help ensure that they have the right amount of tax withheld for all 2020.